Hello, good afternoon. You're watching Closing Trades on 80 now. Well, the market is fairly range-bound at the moment, towards the lower end of the range, to be honest, because Nifty has slipped just around that 24,800 mark. Range-bound ahead of the weekly options expiry, of course, which is going to happen over the course of next 1 hour or so. The broader markets have managed to outperform a bit, and the Bank Nifty also has managed to take a bit of a spike. So that's high by almost 200 to 300 points. ICICI Bank, HDFC Bank, as well as SBI, some of your top gainers from the banking pack, there for you on the screen. India VIX has actually managed to slip a bit despite it being the expiry day. There is no major volatility as such. So India VIX is down 2.5% right now. Chemical stocks, they have been on fire since the word go. So you have names like RCF, FACT, Archon Chemicals, and a lot of the names which are actually fairly active. That ADD news also giving a bit of a fillip to the likes of Epigral, Deepak Nitrite, Deepak Fertilizers, etc. What's also managed to move in the last few minutes is some of the cement stocks. So JK Cement, Adani Bharat, Aramco Cement, these are some of the stocks which are holding up in the green. And of course, there are newsmakers galore. Let's put the spotlight on the likes of IndiGo, Shyam Metallics, Paytm. You know the news flow on all of them. Jefferies, of course, upgraded the target price on IndiGo. That stock is higher. UBS initiated coverage on Shyam Metallics, so that one is in focus. And Paytm down despite the news flow of that tie-up coming in with Zomato, wherein Zomato has picked up their entertainment ticketing business. But apart from these newsmakers, Aisha, we of course have the management of TVS as well to talk to us about their latest launch.
Oh, absolutely. They too are a newsmaker today. In fact, they've just launched the new Jupiter 110cc scooter priced at 73,700 rupees. That's ex-showroom price. The company said that it's going to be closely monitoring the CNG segment in the two-wheeler space and is confident of doing better than industry overall scooter segment as well. In fact, let me welcome on board Mr. K. N. Radhakrishnan, the CEO at TVS Motor Company. Mr. Radhakrishnan, it's so good to have you today on ET Now. Thank you for taking the time out. Now, you've launched this new scooter Jupiter today. Tell me, what's the target segment? How big is the market for this? And how much is it that you've spent for its development?
See, we are looking at very clearly the current Jupiter customer segment where most of the people are commuting customers. And as we see as Jupiter from 2013, the age group has been coming down. So initially it started at 30, now less than 30. And we are extremely happy that we have more than 6.5 million customers in Jupiter. And this new next-gen platform, what we have completely designed and developed, it has got completely new, unparalleled design, performance, comfort, and convenience. And this is definitely going to give customer a high delight because it has got more than 15 features which are first in class, starting from innovative IGO, assist with 10% more mileage, fully digital console, LED headlamps, infinity lamps, front fuel fill, and as you know, the double helmet space, emergency brake warning, distance to empty, plenty. These are all first in segment, and very clearly, it gives an engine which is lightweight, with compact and body balance technology 2.0. So I can keep repeating the kind of features, technology what we have given here. It is really standing for that Zyada Ka Fayda, which we started as Jupiter platform when we started in 2013. This is definitely going to delight the customer. I'm extremely happy that we are adding more value to our customers. We have invested something like 150 crores in coming up with this complete new product.
Okay, so clearly a lot of features coming in there, but what are the export plans for this product? Are you looking at perhaps tapping into that market as well?
See, currently, I would like to put it this way that in total we are about 1 million in terms of scooter per year. We have 4 brands starting from Zest, then Jupiter 110, then Jupiter 125, and in the sporty segment we have Ntorq. The 1 million what I spoke about is in India. Okay, I just want to give you a perspective. The last 10 years, the two-wheeler industry grew by 4%, scooter category grew by 8%, and TVS scooter grew by 12%. Okay, in the scooter of 12% growth in TVS, Jupiter category grew almost 24%. And we want to maintain or better this kind of a growth rate in India. And the international, Asia market is one of the best markets. Now we have started, many other markets where our scooters are doing well, especially the Jupiter 125 and Jupiter 110. We are very confident. Currently, we do about 10,000 numbers. I'm very confident that this is going to help us do much better in many markets, including Asia, ASEAN, and some of the markets like Turkey, some of the markets in LATAM. So this portfolio is going to really, really delight the customer, even in the global markets.
Right. The other thing I wanted to talk about is if you could just give us a breakup of what the demand patterns are like for both urban as well as the rural segment for two-wheelers, and how is it that the respective markets are doing currently?
Yeah, two-wheelers, if you look at this year, the CAGR, no, not the CAGR, the growth rate, the Vahan growth rate, let me put it that way, from April to July, first time we have seen more than 13% the total two-wheeler growth. And first time we are seeing rural doing little better than urban. Rural is more than 14%, urban is about 12%. So rural, for the first time post-COVID, I'm very happy it is coming back. Again, the normal monsoon is definitely positive. And this trend of this 13% is likely to continue this year. And as you know, we have done much better than this growth of 13%. And scooters, with the introduction of new next gen, this Jupiter 110, we are expected to do much, much better. And if you ask me the rural-urban proportion, currently rural is slightly ahead of the total two-wheeler, let us say 100. 52% comes from rural, 48 is from urban.
Okay, so that's the urban and the rural kind of divide. But festive season, that's around the corner. What's been the preparation like? Are you expecting it to be a bumper one? And is there a price rise on the cards ahead of that for the two-wheelers? Do you think you have the pricing power to do that?
We are really looking forward to the festival, because I'm of the view if the current run rate is 13%, festival is going to be much higher in terms of the industry. And we believe in giving better value to the customer. If you look at Jupiter 110 or Ntorq or Zest or Jupiter 125, it is the best-in-class value addition to the customer. Okay, I think what is more important is we have to give more value to the customer than looking at just mere discounting.
Right. And what are your plans on the EV as well as the CNG front? Curious to know.
See, EV, iQube is doing extremely well. As you have seen, we have offered 3 battery options starting from 2.2 kilowatts, 3.4 and 5.1. And iQube customers are really delighted. And we will continue the journey and we will have huge momentum going forward. I'm pretty confident on iQube. We will come up with another product on the EV side soon. Okay. And in terms of technology, we have a very strong R&D team. So you have seen ICE, you have seen EV, okay. CNG, we are closely monitoring. I have full confidence on our design and development team, engineering team. Okay, we will take an appropriate call at the right time. We have a very strong product pipeline planned this year. The first of it is launched today. You will see the EV product coming soon, and we will also have an EV three-wheeler.
So that's the plan with EV. We wait patiently to see what you have in store for us. Thanks so much for joining us today with that latest update coming in on the new launch, plus what else is in the pipeline. Okay, time now to take a look at what's happening in the market. In the last 2 minutes, some of the Adani group of companies have come under pressure. So I'm just watching out for Ambuja Cements, for instance. That one has come off a bit. Adani Power is under pressure as well. Kunal, any buying opportunity within the Adani pack, or what's been the momentum like for some of these names?
Yeah, I think the likes of Adani Enterprise is something which is looking attractive in terms of her trading bed. The stock is hovering around the longer term moving averages, trading at 3100, 3120 mark for Adani Enterprise at the spot level. So which means that the stock is just about trading at its key support points. That's something which is looking attractive. From the cement pack, Ambuja Cement, in fact, today, over the last many weeks, we've seen for the first time some bit of volume picking up as well as momentum picking up for the cement stocks. And I think in that context, maybe the likes of ACC, Ambuja Cement, which have been trading more sideways, they could get into a breakout.
Actually, that's interesting that you talk about the cement pack, because I was looking at Dalmia, JK, Ramco. They're actually all in the green. It's Ambuja and ACC which are underperforming.
Correct. That's the only one which is underperforming.
So you're expecting them to catch up?
Yeah. When the sector plays up quite well, the underperforming one also picks up.
Okay, that's the take coming in on cement. In the meantime, it's aviation and hotels. They are the ones which are leading the charts in terms of the volume buzzers. Interglobe Aviation higher by 4% after the upgrade that came in earlier today. And Indian Hotels, which is higher by a good 3.5% as well as we speak. In fact, from what I understand, the entire hotels pack is looking quite smart today. Most of those stocks are sitting on some decent gains. Indian Hotels, of course, topping the charts there, 642 plus levels coming in for this particular stock. There's Manappuram, there's M&M Finance. These are the other two names which are also looking very, very smart indeed in trade. And the languishing pocket today clearly is autos, you'd have to say, and to some degree oil and gas as well. That's the one which is looking a little bit bleak. Naresh, let's pick up on the two top trades today, Interglobe Aviation and Indian Hotels. Can one go long at this level? Do you see further momentum in these stocks?
So Interglobe Aviation continues to be a sideways consolidation after that move towards 4500, 4550. So for now, that should act as a resistance. So it still is a long-term buy. One could keep a stop loss at 4250 and hold on. So overall structure is positive with crude prices also falling below $78, $80 on Brent. Augurs well for the stock. So for now, 4250 is a stop loss and with which it looks interesting. Indian Hotels also is a sideways consolidation. The stock is at the same prices where it was 4-5 months back. So technically a fresh move starts about 650, 55 levels. So for now would wait for some more price action. But both of these stocks are structural long-term uptrends for now. Could be in a consolidation for much longer. But one could still look at it as a trade for a bounce back to the previous highs.
On some of these urban consumption and travel related name. Time for a break, but before I do that, let's quickly mark some of the stocks and news, and I want to start with IREDA because that stock is in focus on account of the fundraise that they have planned. 4,500 crore is what they are looking at raising. The board meet is on August 29, so we are watching out for that. Stock is fairly excited ahead of that. RT Drugs is the other one, wherein the buyback announcement is expected on August 26, wherein the board will meet. Ahead of that, that stock too is fairly active. Office Space Solution, that one the last time I checked was up 12-13%. The company has managed to expand the footprint in Bengaluru. They have taken premium workspace in certain of the marquee regions of that city. So that stock sitting with decent amount of gains. A quick break and we'll be right back with Sandeep Sabharwal to discuss some of these big newsmakers.
Back with closing trades right here on 80 now. Still holding strong for the markets right now. I mean, with strong, I mean at least it's latching onto the green. It's not really such a quiet day. Although it has to be said that from Monday, when you had that recovery pull in, or Tuesday rather, up until yesterday, the band for the Nifty is only getting narrower. So let's see which way this market actually heads from here. In the meantime, Tata Consumer, Bharti, Asian Paints, Tata Steel, they continue to hold out. Profit taking clearly evident for Tata Motors, M&M a little bit more today. In fact, I think this week autos is going to starkly underperform, led by M&M as well as Tata Motors. These two stocks have languished quite a fair bit. But a lot of bright stars when it comes to the broader market. That trend clearly continues. Let me then welcome on board Sandeep Sabharwal and find out what he's making of the market right now. Sandeep, hi, afternoon. Good to have you on the show. Two stocks you track closely, both Interglobe as well as Indian Hotels, giving fresh, solid moves today. Do you think the prospects continue to look brighter? And what if one were to look to add positions at these levels? Would you recommend that at all?
Yeah, Interglobe, I think, is in a very unique position where the competitive intensity, instead of increasing on improved profitability in the sector, actually reduced. SpiceJet has its own issues, which has led to reduced services, and we have airlines like Interglobe, which is the only listed play available on the unlisted at the cusp of the peak holiday season. So I think the state Vistara, Air India, etc., I think they'll be able to have significant pricing power. And additionally, the input cost pressures have eased off so significantly. So I think that is also boosting the stocks in the short run. So I think there's nothing wrong in Interglobe. Absolutely. I think strategically also it's very well placed. Long term, it should do well. Indian Hotels has been doing well. The management strategy of expanding across various formats, expanding its food delivery, TADs. So I think strategically they are doing very well, and now the big focus only on managed hotels is working well for them. Stock's not cheap at these valuations at all. Like we obviously hold for from very low levels and we continue to hold. So return potential on absolute basis will be low because it's run up so much, but directionally next 2-3 years should still be good for them.
Okay, so that's a view on Indian hotels as well as Interglobe Aviation. Definitely tailwinds behind Interglobe. Sandeep, what within chemicals, if at all, would you look at buying afresh?
No, sorry, I don't buy chemical stocks because I think it's a commodity where it's very tough to track individual commodity prices and then invest based on that.
So a bit of an avoid given the kind of complicated nature of news flow involved in some of the chemical names. But Naresh, if I had to throw that question to you, FACT, RCF, Archean Chemicals, you have a lot of other names as well, the smaller companies that are doing quite well, alkyl amines, etc. Would you be a buyer in any of these names?
So in terms of a technical structure, Archean Chemicals, although not a lot of chart history, but that's a stock which has come up on a new 52-week high band, unlike the other names which continue to struggle. And then maybe a Tata Chemicals, which has made a good enough base around 1050. These two names look interesting. Others have already moved up quite a bit, something like a Deepak Fertilizer, RCF fertilizer space has already done well. So out of all the names, ACI looks promising at current levels.
Sandeep, what's the right way to approach some of these defense and railway names? And I ask because some of these select PSUs have actually fallen a good 30 to 20 odd % apiece from their previous highs or all-time highs. And the last month especially has been, particularly excruciating for some of these names.
I think defense stocks eventually will come into buy range because of the huge visibility of growth and order flows still coming in. The cabinet is still approving new projects, new investment cycle. I think it's railways where we need to be a bit concerned on because there has been a very sharp run up and incrementally new project awards or new investment announcements, etc., are not there. So I think the growth issue could come up in railway stocks, and I think the valuations are still very high. But I would be concerned about railway stocks still, despite the near-term correction. And defense valuations are high, but long-term directional play is still good. So I think we need to wait for the right opportunities to increase allocations of for those who don't have, buy into them at some stage.
Sandeep, curious to know how you've read into Zomato actually acquiring Paytm's entertainment ticketing business. How do you think this deal is going to pan out? Seems like at least when trade started off that it's more beneficial for Paytm because that was the stock also which was holding up. But what's the take now on both Paytm as well as Zomato?
So I think how the valuation happens in these kind of deals is very tough to predict. So it's not a small amount, like 2000 crores plus is a very significant amount. And what Zomato gains out of it and how they can leverage that to improve earnings is something we have to see because on their core business, they've just started becoming profitable last 2 quarters. And now they're going for this large acquisition. So I think that is an issue with some of these new age companies. As far as Paytm goes, I think it's a question of so I think it shows a sort of desperation on their part to get in cash flows. So the internal picture could be even worse than what we can see from the outside. So I think I would be cautious on Paytm.
Okay, so a little bit cautious on Paytm, but at least for now it shows that on their balance sheet there's enough cash. We'll have to see how really it pans out. Just taking stock of what else is happening in the market right now. Autos, as Aisha was pointing, is clearly on the back foot today. We were speaking with the TVS management a while ago. They were confident about the festive sales. But Sandeep, what would you do with that basket? Is this dip a buying opportunity or just stay away and perhaps the best is done for autos?
I don't think best is done. I think it's a phase of consolidation. They have done so well, most of these stocks, if you see. like Tata Motors, obviously we've exited a month back, but it also moved from 400 to 1100 plus. Like stocks like M&M moved from 800 to nearly 3000, etc. So when after such sharp up move, there has to be a phase of consolidation, and that's getting also exaggerated by the near-term slowdown in the overall market. However, controlled input costs, low fuel, like there's unlikely that fuel prices will go up, and the festival season should be decent, I think, for auto companies. So once this consolidation phase gets over, I would think that this is a sector which definitely could have potential.
Not really writing it off. It's only consolidation, might just pick up. So maybe you want to start betting onto that space again. Thanks, Sandeep, for making time and speaking with us today. But since we're discussing the subject of auto, let me bring on board my colleague Sumit as well. He's done some analysis as to what the expectation are with respect to the GST meeting. Because while the likes of Rajiv Bajaj, etc., have pitched that there should be a bit of a reduction or some sort of SOP available for clean fuel vehicles, it doesn't look like it's coming soon. Right, Sumit?
Well, this demand has been raised by Rajiv Bajaj, MD Bajaj Auto. He visited Finance Ministry last week, met officials there. He demanded SOPs for EVs, alternate fuel vehicles. We all know that Bajaj Auto has launched world's biggest, or first, in fact, CNG bike last month only. Now Bajaj wants some SOP. However, sources tell us that no EV SOPs have been planned for the coming GST Council meeting on September 9. No SOPs are in the cards for that. In a way, there is no currently plan of the government to give anything on GST as far as EVs or alternate fuel vehicles are concerned. But on the other hand, some taxation issues can be solved, can be looked at, can be some clarifications can be given in September 9 meeting. Well, foreign airlines, around 10 of them have been given tax notices worth 10,000 crore rupees. Now, this issue can come up in September 9 meeting. Also, Infosys $4 billion demand, that can also be considered, some relief on that part or explanation on that part in September 9 meeting when it happens in New Delhi as far as GST Council is concerned. So all these issues are relating to tax. Clearly, we all know that there's a slowdown in ICE market, which is internal combustion engine, diesel petrol market. EVs are also facing slowdown, so it is natural the bosses will go to Finance Ministry to seek some SOPs. However, at this moment, Finance Ministry is not in favor of any such SOPs.
Right, okay, let's also get in some closing trades as well on that note. Kunal, let's have your list.
So that's a buy on Asian Paints. The chart after quite some time is looking attractive. The stock has come back above its 200 DMA, broken past above the 3100 mark. Looks attractive for another at least 100 to 150 points on the upside.
Okay, that's a buy on Asian Paints coming in from Kunal. Naresh, what about your closing idea?
So that would be a buy on Tata Communications, which has been sideways for the last almost 8 to 10 months. Did a false move a few weeks back, and now today has given a breakout of a 10-day trading range. So could be on a retest towards 2000, 2100 mark. So a short-term trade here on Tata Com.
Short-term trade on Tata Communication, Asian Paints looking good to Kunal. On that note, we'll slip into a very short break. Don't go anywhere. Last 30 minutes of the trading session and the weekly options expiry on the other side. Welcome back. Quickly taking stock of what's happening with the market right now. It does seem like we have slipped a bit. We're just around the 24,800 marks. We haven't let go of the 24,800 level, but just around that mark. Bank Nifty up around 277 points in the pockets of chemicals, some of the select cement names, aviation, hotels. These are the spaces which are doing quite well, while on the losing side, you have some of the pharma names which are retracing, Paytm, Angel One. These are some of the names which are down. And then, of course, autos are on the back foot as well. But Devang Mehta also joins us on the show. Devang, hi, good to be speaking with you. What are you doing in the markets right now? Any fresh stocks that you have managed to recommend to your clients? Any fresh ideas?
Anisha, I think I'll talk more about themes and sectors rather than ideas, and of course I'll give certain examples on the way. But yes, what we feel is that both the sides of the market, be it consumption or even be it capex, both have come back with a bang. And I think post the elections, post the budget, and post this volatility that we saw a couple of weeks back during the yen carry trade, I think market has got from strength to strength. So whichever sectors were not performing, be it earlier FMCG companies or certain auto companies, or even discretionary consumption companies, the likes of Titan, the likes of Trent, just giving certain examples, right? All these companies have come up with good set of numbers. Trent was sort of a market beating number, which I think nobody sort of imagined. And this has been one of our portfolio stock for most of our clients. And this has also come up with great set of numbers. So again, I think on the ground, if you look at, there are certain sectors which have started to do very well. Even the rural consumption, if you start to hear, even the tier 2, tier 3 cities that started to pick up a bit. And the capex side of the market, which was people started to write it down that power ancillaries, capital goods, infrastructure will not do well. That has again certainly gone for a toss. So I think again, both the wheels of the economy running very well, both doing well, will finally, I think, lead to credit growth also moving up slightly. Yes, we know that there's a deposit growth issue with the banks, but most of the money is coming towards capital markets and wealth management type of businesses. I think this is where financialization of savings has also started to again go forward. So my sense is, yes, a combination of sectors related to capex, consumption, and again certain sectors in the credit growth will sort of be a good investment portfolio if somebody has a 1.5 to 2 year horizon.
Right. Okay, Devang, stay with us. Lots more to talk about. The one stock which is in focus today has been Nika, and this new age tech platform company has really been on a tear. In fact, the marketing spends also have been on the rise. Is the company then gearing up for a robust future growth ahead? Let me take it across to Snehi and get in the trend analysis. Snehi?
Well, yes, so Nika's con call transcript was released yesterday, and one thing that stood out was the outlook that they have given on marketing spends. Now in Q1, marketing spends were higher by 60 basis points for Nika, and the management has said that the marketing expense will most likely be in the range of 8.5% to 9% going ahead. Marketing and advertising expenses have gradually increased on a year-on-year basis since Q2 FY23 for Nika. Now, if you take a look at this on a sequential basis, of course, because of factors like monsoons and seasonality as well as festive season, you have a lot that changes in terms of marketing spends. But a real trend is being spotted on a year-on-year basis, because if you compare Q2 FY23 to Q2 FY24, or likewise Q3 FY23 to Q3 FY24, even if you take the latest numbers of Q1 FY24, you had marketing coming in at 8% as part of the net sales value. In Q1 FY25, that has gone up by 60 bips, like I mentioned, to 8.6% of the net sales value. Now, when you take a look at it in the absolute terms as well, in Q1 FY24, the marketing spends were 971 crore rupees, and in Q1 FY25, that has seen a big jump coming in at 1,268 crore rupees on the marketing front. Marketing support revenues have also grown by 44% on a year-on-year basis in Q1, which is a key positive that is coming in, and brokerages are also liking this. Quickly taking you through what the Q1 performance looked like for Nika. Revenue was up 23%, PAT up 2.5 times, and EBITDA was up 30% on a year-on-year basis. Nika increased its existing majority stake of 51% in Dot & Key to 90%, and they also picked a majority stake in clean beauty brand Earth Rhythm as well. So that was Q1 for Nika, but well, yes, marketing spends and a trend is being spotted on a year-on-year basis on that front.
Thanks for that. Watching out for Nika. And not just that, overall urban consumption as a theme is doing quite well. Take a look at Kalyan Jewellers for right now. Of course, there was a large trade that happened on that one, and that's the reason of the heavy volumes. But nonetheless, that stock has been doing quite well. And of course, Titan 2 has been something which has been in focus. It was a softer Q1 that happened for them, but they are hopeful of an improvement going forward. In fact, this is exactly that we discussed with the management of Titan earlier in the day. Hear out what they had to say.
One of the things which has been in the making, in the building, is actually the differentiation that Titan brings into every category that it operates in, into the wearables category as well. And we expect to see some strengthening of all that during calendar 24 and early parts of 2025. This is a category that we were a late entrant into, as we have spoken even in the past, and to that extent, it has taken us a little longer to build that differentiation. And it is through that differentiation that we will build a business which is very strong in a customer value proposition front and delivering reasonable returns to the company and in the overall portfolio as well. And we expect to launch, there are many new products which are fast tech, as I would call it, bringing in the technology and fashion combination in the smart wearables line up in the next many months. And through that, we want to build that differentiation in the market and do better than in the past.
We didn't come from the real estate business, so we didn't know the business. We didn't come from the real estate business, so we wrote our own rule book. And I think our rule book seems to be working for us. I think today we have built one of the most formidable brands in Bombay market. We're delivering all our projects at least 2 years ahead of schedule. Our new project will be 2 years and 6 months ahead of schedule of RERA commitments. So we built a solid brand. You're absolutely right. Even Bandra, the bookings have been very strong. The reports that have come out show we're the number one in terms of sales in Bandra and Thane. Both markets were number one. So that's a heartening and a rewarding feeling that in a space which is 25,000-30,000 developers, you're in 5 years right on top. That was a really lucky acquisition that we made, more a merger between our engineering business and Many Engineering. Many's got a lot of good skill sets, especially in titanium and aerospace, etc. The thing is, the merger has just finished a couple of months ago, and we have some big plans. So it's all on the drawing board, so I can't be very specific.
Sure.
But yes, there's a huge opportunity in that space, and specifically with Make in India. We are evaluating quite a few opportunities there.
Right. Devang, where within the consumption end or spectrum, I should say, are you comfortable putting in fresh money to work? I mean, the K-shaped recovery, of course, has played out very well in the entire premiumization theme since COVID. But do you think now it's time to go bottom up and perhaps get an exposure to the rural players?
Yeah, Aisha, a very good question. I think I was just ready to sort of go after looking at this interviews of Titan management as well as Raymond. I think very clearly one needs to be, yes, both bottom up as well as top down, because first you need to understand the theme very well, whether the theme is going to run well, whether the sector is going to do well. So coming back to business, I think very clearly these are our favorites, the companies like Titan, the companies like Trent. I just talked a couple of moments back that these are companies which are on the discretionary consumption side. Now just look at a company like Trent, right, from a Zudio to a West Side to a Zara. I think they have across the spectrum of people. They are sort of proxy play to the aspirational Indian, right? Even Titan has everything and anything under the belt, right? From the watches to jewelry, which is the largest segment, where they're trying and expanding their market share, and it's the most trusted name over there, right to Fast Track and other watches, as well as the Taneria, which is the sari brand, which is across malls they are now setting up. So I think it's not only a retail play, it's a discretionary consumption play, it's an aspirational Indian story play, and plus most of these companies just trade at a bit of premium valuations, but they sort of command that premium valuation because they give up that type of numbers, and the management commentaries are always sort of very encouraging. So my sense is that in discretionary consumption, Titan, Trent are already the poster boys in that sense. Also the hotel play, which we love to talk about, companies like Indian Hotels, companies like EIH, where the average room have been growing. The demand is growing at 13-14% and the supply is growing at 3-4%. I think hotel as an industry also has some legs to go for the next 2-3 years, again on the back of discretionary consumption growing and luxury consumption also growing.
Okay, so that's the word coming in on urban consumption, Titan and some of those names. But overall, pharma and chemical as a basket has also been doing quite well, and RIL ahead of the AGM is also something that we are watching out for. In fact, Prabal Singh joined us earlier today to talk to us about what to expect from the oil and gas space, because energy as a basket is under pressure today, but otherwise it's been doing quite well. We also talked to him about what his expectations are from the RIL AGM. Hear out what he had to tell us.
The Reliance AGM has almost, it's become sort of this blockbuster event every year where we tend to tack on a lot of expectations about, huge announcements. that may or may not come. I frankly would not want to hazard a guess. If we look at the annual report very clearly, I think the focus now is starting to shift towards renewable energy milestones. So one would look forward to any specific milestones or timelines around the setting up of additional factories with respect to the four legs of their renewable energy journey that they have been basically planning and working on for the last 2 to 3 years. So that would be one. And second, any updates as far as the unlocking of value of the retail and geo business, which has been a long time coming. I think those are the two aspects to probably look forward to in this AGM.
Okay, so that was about Reliance Industries, but GMR Airport, that stock has seen quite a bit of turnaround. In fact, let's pull up the YTD chart or maybe a one-year chart, and that will tell you the kind of momentum it has seen. Jefferies had recently initiated, you saw that backing coming in from Chris Wood as well, and there are a lot of investors which have turned positive on that one. In fact, I got the opportunity to catch up with the management at their Goa Airport, that is MOPA. Hear out, what interesting bits are we going to cover there?
Our whole focus is to how to quickly turn our airports into profitable entities, and how, after meeting all stakeholder commitments, which is basically revenue share to the government, how we can start to service our shareholders who've been waiting quite patiently now for the last 10 to 15 years to start getting dividends from the airports. So our first focus is that, and interestingly, in Hyderabad, we should, it's already profitable. This year we expect dividend flows
profitable at the bottom line itself, not just EBITDA.
Yes, yes. Okay. And we expect dividend flows from Hyderabad to the listco start to happen in this current fiscal year itself. So, you know, our whole focus is profitability and also start taking our airport platforms to a level where we can start giving dividend out to our shareholders in the next 3 to 4 years' time.
So next 3 to 4 years, within that we'll see the dividend coming for the shareholders, or after that?
After that.
Fair enough, at least that clarity is indeed appreciated.
Right, okay, that exclusive conversation. Stay tuned to ET now for that entire piece. In the meantime, it's the usual suspects. Interglobe Aviation, Indian Hotels still holding out well. Astral has made a decent jump up. That stock holding up 3.25%. Piramal Enterprises is now sitting at a gain of about almost 3% or so. And then Godrej Consumer Products, which has also spiked up about almost 3% as we speak right now. Bunch of other names which have also been in, focus. IREDA, the board is looking at a sizable 4,500 crore rupees fundraise. So that stock has really been on a tear from the word go today. This Paris Defense as well, the Ministry of Commerce has granted an industrial license for manufacturing of defense products for the next 15 years to them. That stock locked in upper circuit. And then, of course, there's an Aarti Drugs, TCI as well. The boards have fixed up a date for a buyback mulling. So both of these stocks as well are in focus this afternoon. But Devang, just wanted to figure out what is it that you're doing or recommending right now for defense holdings, obviously for those who are in the money?
Yeah, I think most importantly, one needs to now identify the men from the boys when you talk about themes like defense, when you talk about themes like railways, which had a dream run in the last 3-4 years. The stocks have given you 10-fold, 15-fold, 20-fold returns. Yes, there is some profits to be booked on the table for sure, maybe at least a 15-20% type of profits to be booked. But most importantly, I think now it is time to get more into proxy plays. Just a simple example is that while you talk about railways, while you talk about defense, there are bearings which are required everywhere. There is motion management which is going to be required everywhere. And there comes companies like Timken India and other bearings company or other motion management companies which supply to this, which also manage the sort of annuity type projects for them. So they do the maintenance stuff as well. And if there is some replacement required, they are the only companies which you again go back and ask them for the replacement. So these are type of companies which not only are niche in terms of their their products and niche in terms of their services. But this is the company which has an operating profit margin of roughly around 20 to 23%. So these are the companies we are sort of recommending, which are more proxy plays. We know that the business is going to thrive for the next 3-5 years as capex thrives. So these are proxy plays which probably one should look into while we talk about defense and railways.
Okay, watching out for some of those proxy plays. That's the word coming in as far as defense is concerned. But time now to take some of the BTSC trades from a technical experts. Naresh, what's the BTSC or STBT idea? Naresh, you'll have to unmute yourself. Yeah.
First is a buy on Tata Communications with a stop loss at 1900 and a target price of 2000. A 10-day range breakout here. Second is a buy on ONGC, which has corrected a good 4-5% from the recent top. 320 is a good support zone. Expecting a bounce back here. Stop loss at 320, target price of 332.
Okay, and Kunal, what about your recommendations?
So the first one is about Bector Foods. That's a chart which is coming back into a breakout above 1500 plus levels. So would look out for targets in the range of 1580. Stop loss could be kept at 1490. And the second would be about Manappuram. This could be interesting to play the stock. For many weeks had gone through a consolidation on the 200-210 range. Today the stock seems to have finally managed to break out of this 210 major resistance. So would look out for a higher target of 230. Stop loss could be kept at 210.
Okay, point taken. Prakash, actually, my colleague had also done a story on the new, norms or new policy which is expected for the public sector entities. Let's take it across to him to find out what additional details is he finding out. Because Prakash, of course, the PSU stocks have seen a massive re-rating, but what's the plan that the government has for them from here on?
Yes, we are learning from our sources that the government will continue to move forward with the new public sector enterprise policy. We are given to understand that major tweaks are likely in new PSU policy despite change in disinvestment strategy. As you are aware that the government has adopted calibrated disinvestment strategy where disinvestment transactions will be taken forward based on market conditions. The sources are informing that the existing PSU policy provides flexibility in timings of disinvestment. Therefore, no major amendments needed in existing PSU policy despite change in stance. A very significant development coming in. In fact, value addition and asset creation in PSUs will be given a priority. Sources are also informing that the PSUs are in better position now on back of multiple structural reforms. Core and non-core assets of almost all PSUs have been identified and priority will be given to the listing of non-core assets of PSUs.
Okay, that's the new PSC policy currently in the works, and that's the exclusive info that we're picking up on the same. But Devang, what else are your current overweights or underweights in this market?
We've been generally overweight on, as I keep on at the expense of being repetitive, more of manufacturing growth, more of motion management, more of energy efficiency, more of automation. I think these are the themes we have been sort of riding. Energy or power ancillaries or even capital goods for that matter. Very unique companies, very I can say decent proxy plays, right? From I used to talk about Siemens to Hitachi Energy to Timken India to PT Engineering, those type of engineering companies, even ER&D companies like L&T Technology Services, which are extremely core to their industry. The most important part that we focus when we buy this type of businesses is whether the size of the opportunity is huge or no. So the size of the opportunity has to be large. The company has to have a dominant market share, plus it has to sort of give you stress-adjusted returns. So that's the type of sectors that we are generally being in. And of course, with this, as I talked about a bit of consumption, we also like a lot of parts of even discretionary consumption, which are again delivering great numbers and robust commentary, plus generating free cash flows as well.
That's a take coming in on some of these stocks. Varroc Engineering is up 13%, and in the last few minutes, I think Capri Global has seen a bit of a spike as well. Kunal, any view on these two?
Capri Global is something which I do track, and the stock is coming back into a breakout, might breakout about 200 DMA. 215 to 16 is where the 200-day moving averages for Capri Global. The volumes in the last 2 days, especially yesterday, was much on the higher side. But I would still wait out for a breakout. I think the yesterday's high for the stock was around 226 mark. Today's high so far is around 216 to 18 levels. So if the stock crosses about yesterday's high of 226, then we can expect that this last couple of days of strong volume push could probably result into a turnaround for the stock over the near to medium term.
Naresh, any view on Vodafone Idea, because very heavy volumes on that one, and Varroc Engineering if you track that one?
So Idea has just taken a small tick in the last 1 hour, about to cross 1640, which was the high for the last 12 sessions. If that does happen, we could be looking at a move towards closer to 17.5. So looks interesting. Varroc is a single day move. The trend has been down for quite some time. For the last almost 2 months, the stock has corrected from 700 all the way to down to 550 to 520 levels. Recovery to 620 would continue to face resistance. So not very interesting, but Idea could be a trade for the short term.
Those are a couple of other buzzers in trade right now. Let's also look at the losing end of the market. Some of the gas names definitely are the ones which are ebbing off. So both MGL, IGL are in the week today. Tata Motors, M&M, of course, we've been marking as to how they've been ranked underperformers within the entire auto story, which seems to be somewhat stalling. In fact, I don't know if we can bring up the 1 week and the 1 month chart for both Tata Motors and M&M and perhaps draw a comparison over there. Okay, not on a 3-month basis for sure, but a 1 month and a 1 week basis, maybe you will see that red tick come by. Kunal, do you also feel that both Tata Motors and M&M have sort of paused for a while now?
Yeah, I think M&M has paused for a while, but Tata Motors, I believe, could probably have seen the best part behind it over the near to medium term. I think the stock has gone through a lot of stagnation. The indicators have started to get into a reversal mode. Volume patterns have started to reverse for Tata Motors. So I believe, we've seen the price points where closer to 1100 mark, 35 odd levels, there is certain amount of selling which emerges into the stock price. That means that we could be looking at a point where the stock is seeing a lot of distribution at higher levels, and that generally indicates that we could be looking at a prolonged consolidation or even a downtrend for the stock over the medium to long term. So expecting the stock to gradually move into a lower support range, say closer to 900, 950 odd, could be a potential downside target for Tata Motors.
Right, okay, that's the move coming in and what the auto story is currently. But Devang, there's been so much chat around autos, right, on whether or not the sector is hitting a slowdown. And I think questions came about when across the board you had, discounts being doled out from both passenger as well as two-wheeler manufacturers. I wanted to understand what your thought is currently on autos.
I think, yes, the industry went through a huge turmoil, and you are absolutely right, not only in the recent past, but also if you look at the last 4-5 years, right from COVID to the migration norms, which came into insurance, which came as a deterrent to a lot of even two-wheelers. I think this industry has gone through a lot of turmoil, and now what has happened is most of these companies which are sort of retaining their market share are getting rewarded. Companies like Maruti, which has traditionally been a very high market share company. Yes, of course, it lost a bit of its market share to its competitors, but again has come back best with what it knows, right? The petrol engines and maybe even a bit of hybrids, but not at all getting into the range where they are not that competent. So that has played out very well. I think the demand for autos has also grown for sure. That we know that the per capita consumption of automobiles in India, be it two-wheelers, be it four-wheelers, is on the rise. And I think, yes, with discretionary, we talked a lot about discretionary consumption. The first thing that comes to an aspirational Indian or a person who rises up the cadre is that he wants to probably buy a new vehicle. So I think the biggest revelation to me is while people used to buy hatchbacks and sedans and post that used to go to SUVs, now SUVs are the most highest selling cars across the spectrum. So yes, I think this premiumization is going to happen. Companies like M&M, Maruti surely benefit. Even two-wheelers like Hero MotoCorp, the likes of TVS also sort of benefits. And also the biggest beneficiary is going to be auto components, auto ancillaries. One needs to be selective over there because you can't be in everything and anything. But I think these are industries which will do extremely well over the next 2-3 years.
Okay, Devang, on that note, we'll let you go. Thank you so much for making time. In fact, Naresh as well as Kunal, thank you for joining us today as well. We're wrapping up the day with Nifty just around that 24,820 mark and the Bank Nifty above 300 points higher. Let me now toss it across to Snehi to get the sense of the other newsmakers today in this trading session.
Well, absolutely. So flat close coming in for Nifty today, 0.2% higher. Sensex also in tandem, but you had Nifty mid cap that was an outperformer in today's trade, 0.7% higher. But on the flip side, Nifty small cap also rather subdued, but nonetheless closing with a slight positive bias, just 33 points higher for the Nifty small cap index. Let's quickly take a look at some of the big buzzers in today's trading session. But before we do that, sectoral movers. Then you had Metal, FMCG, PSU Bank, Nifty Bank, and Nifty Realty that did pretty well for themselves today. On the flip side, Nifty Energy was your top loser today, 0.6% cut coming in. Nifty IT, Pharma and Media have also ended the day in the red. Let's shift focus, talk about some big stocks, big gainers in today's trade. Office Space Solutions was up 15% on the back of two launches in two new office spaces in Bangalore. Irera was up 9.5%. Kalyan Jewellers was up 7.2% as well. BEML also did well. Let's talk about two big newsmakers today, Zomato as well as Paytm. Jefferies has maintained a hike buy on Zomato, hiked the target price to highest ever 335. On the flip side, you had a negative note coming in from Citi on Paytm. Sham Metallics was up 6% as well. Dabur did pretty well for itself on the back of the new MOU that they signed up with the Tamil Nadu government. So that was also a stock to watch out for in today's trade. On the back of an expected block deal, Alchem Labs was in focus today. You also had Zentech because they had approved their QIP pricing. And on the back of order wins, RVNL, BEML, Hoodco, GMR Airport as well as Welspun Enterprises, all five stocks held up pretty smartly in today's trading session. But well, yes, you had big winners and big losers also today. On the losing side, you had the names like GSK, KFintech, Hitachi, Paytm, Suntech Realty, Uno Minda, all of these stocks on the losing side. But that's how we are shutting shop for the day. Absolutely flat on the Nifty, 0.1% higher coming in, 24,810 is how we end today's trading session.